So friends, in this video we are going to talk about section 14, and this section is talking about the change in rate of tax. What is the impact as far as time of supply is concerned if there is a change in the rate of tax at any time between issue of invoice, making of supplies and receiving the payment? What is the impact, right? So section 14, this talks about change of rate of tax. How does it affect the time of supply in relation to goods and services, right? So friends, first of all you have to understand that in a complete transaction there is an invoice, there is a payment, and there is actual supply. Invoice, supply and payment, right? Now these three may be at three different dates, and there can be a change in the rate of tax between issue of invoice and the actual supply, or between actual supply and the payment. Then at what rate actually the tax will be payable, that we are going to talk about in this section. Now this section has got overriding effect over section 12 and 13. It means if there is a change in the rate of tax between these three events, then the time of supply will not be decided as per section 12 and 13. It has to be decided under section 14 only, because this is having overriding effect over section 12 and 13. So if you start reading section 14, that begins with the wording that notwithstanding anything contained in section 12 and 13. So this has got overriding effect. And since this is common for 12 and 13, it means this is for goods as well as services both. Goods and services both, the provisions will remain common. Otherwise section 12 is for goods and section 13 is for services, but this section is common for goods as well as services both, right? This is something very important, that this has got an overriding effect. When the section is applicable, that is also important to understand. The rate of tax is changing between issue, supply and payment. This is not the exact order. In a situation there may be payment, then supply, then invoice, or there may be invoice plus payment, then supply, and any order can be there, but these are three different events. So if there happens to be a change in the rate of tax during any of these events, then what will be the implication of that as far as time of supply is concerned? So in this section we will divide the whole scenario in two parts. This is in two parts. This is supply of goods or services before change. What is the change? Change in the rate of tax. And this is supply after change. So this is first bifurcation, is when the supply has been made. Actual supply of goods and services, whether it is before the change of rate of tax or it is after the change of rate of tax, right? Now when the supply of the goods or services has been done before the change of rate, now we have two situations. In this case, or rather three situations are there. This is talking about invoice and payment both after change of rate. actual supply has been done before the change of rate of tax, but the invoice as well as payment both are after the change of rate. In this situation, the answer is, or you can say time of supply is whichever is earlier. But both have been done after the change of rate, so effectively the new rate will be applicable. Effectively, new rate will become applicable. Then we have another situation, invoice before change and payment after change, right? Now in this situation, supply is before the change, invoice is also before the change, so here also comes whichever is, or rather, so certainly this is before, so effectively the old rate will be applicable, not the new rate, but old rate will be applicable. Now if we change the situation, again same thing is going to happen, where payment is before the change and the invoice is after the change. This is payment before change and invoice after change. Conclusion will remain same, that is whichever is earlier. Of course this is the earlier, so here we have whichever is earlier, and effectively this will be old rate. So what you can say is that out of the three events, that is invoice, payment as well as actual supply, where the majority is out of the three, that rate becomes applicable, right? So here we said supply before the change and invoice is also before the change, this and this. In this case, whichever is earlier, that is old rate. Then supply before the change and payment before the change, again two things are there, then old rate. But here invoice and payment, these two are after the change, so we have the new rate applicable. Now same thing will become relevant here, but in this case we have supply has been done after the change of rate of tax. So here we will have invoice before change and payment after change. Now you can answer the question, where is the majority? Supply is also after the change and payment is also after the change, so certainly the new rate will become applicable. So in this case, date of payment, this will become the time of supply, and you can say the new rate will be applicable. New rate, right? So I am saying that out of the three, where the two are, that rate is applicable. So in this case, supply is after the change, payment is after the change, so out of three, two things are after the change, so the new rate will become applicable. And then we have invoice plus payment, both before change. So now out of three events, two are before the change of rate. So in that case, this is whichever is earlier, and in this case the old rate will be applicable because both have been done before the change. So this is old rate. Okay. Now the third situation is payment is before the change, because in this case invoice is before the change. So in the next situation we have payment before the change and invoices later. So in that case the supply plus the invoice both are coming after the change, so the majority comes after the change, so the new rate will become applicable. So here we have payment before change, invoice after change, right? So invoice is after the change, supply is after the change. So effectively this is the relevant date. This will be the time of supply. So here new rate will become relevant, right? So out of the three, where the majority is, where the two events are, that is the crux of entire thing, right? Now you see here, supply of the goods and services before the change. So if two things out of three are done before the change, then earlier of the two is applicable, right? So here we say invoice and payment both are after the change. So in that case, the new rate is applicable. Otherwise, if invoice is before the change, services or rather supply is also before the change, then certainly the date of the invoice is relevant. In this case, payment is before the change, supply is also before the change. Again, the date of payment is important, so old rate is applicable. So in the entire thing, just understand one thing, that out of the three, if two are, where the two are, whether before or after, accordingly the time of supply is going to be decided, right? Now when we say the payment, the meaning of payment will remain same as we talked about in section 12 and 13. It means the time of payment means when it is credited in the books of, it is credited in the bank account, or the entry for that is made in the books of account. That will be called as time of payment. So payment means this is entry in books of account or credit in bank account, and out of the two, whichever is earlier, that will be called as time of payment. So friend, this is section 14. What is the impact if there is a change of rate of tax between invoice, supply and payment? If the supply has been done before the change, this is the situation, then we have to see at what time the invoice and payment have been received. If the invoice and payment before the change and the supply is also before the change, then effectively no change, that situation is not covered in this section. Listen carefully. Invoice before change, payment before change, supply before change. So when all three are before the change, certainly the time of supply will be decided as per section 12 or 13 as the case may be. But when invoice has been, or rather supply has been done before the change and invoice and payment both are after the change, then whichever is earlier, so new rate will become applicable, because these both have been done after the rate of tax has been changed. In this situation, invoice is before the change, supply is before the change, so the date of invoice will be the relevant date, or you can say that will be the time of supply. If the payment is before the change and supply is before the change, in that case the date of payment will become relevant, right? If the supply is after the change, then we have to see invoice is before the change and the payment is after the change. So supply is after the change, payment is after the change, so out of three, these two are after the change, right? So when it is after, the new rate will become applicable. Invoice plus payment both are before the change. In that case, whichever is early, that is old rate will be applicable, and the payment before the change and invoices after the change, then certainly the date of invoice will become relevant, that is the new rate. So out of three, where the minimum two are, if all three are before the change, section is not applicable. If all three are after the change, section is not applicable. So situation is this. So out of the three events where the two are, accordingly the rates will be applicable. So this is section 14, and with this we also come to the end of topic, which is called time of supply. In the next chapter we will be meeting with the valuation. Thank you.